All right, we are here on CFDs on gold, doing a little analysis here, and I'm hoping to keep this short, but I'm pretty sure I'm going to find a whole bunch of nuggets that I'm going to explain. This is really just for myself that I've wanted to do for a while. Anyways, this is the 12-month gold chart, and it's 2:54 p.m. by the way, and it's almost market close before the bell. And it is Friday, April 21st, 2023. So we have the blueberry here, the dark blue. That is at 1268, or let's just say 1269. So you can see that the blueberry is touched rarely. Okay, the last time it touched was in 1997, and it was under the blueberry all the way until 2002. So that leaves 5 years right there, right? Then you have these little blips right here from the 60s. Oh, what are we working with here? Ah, okay. We have a little blip here. Check this out. Early 1900s, all the way up until, well, actually, there was a nice little pop here in 1931. And then there's 1932, back to the usual blueberry. Then it skipped 1933 up again. Then it did this little channel here. And 1949 was another, I can't really say plummet because this was $35 rounded up and this is $31 rounded up. Of course, back then in the 1940s, it's probably a big deal, but not today, right? Today you are seeing some crazy swings here. Crazy, crazy mood swings. But anyways, back to what I was saying. We have from 1968 to, let's just say it took until 1972 to leave that blueberry. That's now that you think about it, that's 4 years. Okay. So you're looking at a 4 to 5 year blueberry touch cycle. Okay. And then you have this little blip right here. Maybe I should do a little drawing. I don't know. But you have this little blip, you know. And we don't want that showing on any of the other charts. We just want it on the 12 months. So let's do this. We don't want it on the minutes. Let's just, there we go. It's on the months. What do we have here? 1992 and 1993. So it barely, well, actually, it might have touched. I don't have my wicks on, as you can tell, and I'm not going to turn them on right now. So we don't know if that actually, well, we're not even going to go there. Let's just stay focused, right? If you want to figure that out, just do a 12-month chart, figure it out yourself. But anyways, we have this nice little V on a 12-month, and you see this goes to 1671, the resistance area. Okay, so that would be the make or break if gold leaves this area and goes below it and stays below it. It will probably touch the blueberry if it does that, if it goes below the 1686. Now, my concern here is not that it'll just, okay, if it just keeps going up and up and up, right? meaning our system just keeps printing money, and the US dollar is going down, of course, as gold goes up. And of course, it can be broken. But the concern is that it keeps going up and up and up without any sideways action. Okay. So if it continues to just go like that, then that means the dollar will be going down. It will be plummeting. However, if we have, I should have drawn that continuously, obviously. If this goes down, that means the dollar will continue its rise, which is highly possible, of course. If you've read any of my old postings or publishings, I speak about how the dollar is in a nice, beautiful last leg formation of a W once gold stops trending up. Okay, so once gold stops trending up, the US dollar will continue its W leg and the dollar will skyrocket again. Okay, but we don't know when that is. We don't know what type of headlines we'll get when that happens, but one of these days it will happen whenever the US government decides that the dollar needs to continue towards the 120 mark. Okay. Now let's go and that's when you will see that drop to the blueberry 1268. Let's go to the monthly and let's get rid of that line there. We don't need that anymore. Oops. There we go. Now I know you saw me take this off of months, right? Okay, it needs to be 2 months and above. All right, now it's gone. Now, something really beautiful about this gold right here. You had the W little formation, right? Little teacup handle or cup handle. And you see that it's literally, I'm going to have to keep some drawings up here for you. You see that it's literally, it literally came out of a nice resistance point here. But it's not even done yet, right? It's barely making it. So a nice little push would be pretty nice, but that also means that the US dollar is going to plummet and treasuries are probably going to rise. Okay. So, and you also see this nice point right here where it broke out, right? You have another breakout here. All right. This breakout here is, let's see, the point, top point is 1974. And this is when inflation was really high before, when Volcker had to do the raising of rates. Not exactly, I don't remember exactly what year it was. I did the research on it. It's on another chart. But the 70s definitely had some inflation that they had to deal with. They had to increase reserve requirements within the banks, which broke the issue. And that's one of the reasons that we have such high inflation right now, because the Federal Reserve does not require the banks to have reserves right now. And I also have I don't know if I actually made the YouTube video on that or not. I'd have to check my YouTube channel. But if I didn't, that video should have been done 2 years ago. And of course, that's my fault for not making that video if I haven't made it already. Because it would have definitely been useful. Nobody else was actually talking about it. Let's make this green. Let's do the color. Actually, let's do pink. I know. You're like, that doesn't even matter, right? No, it doesn't matter at all. But that's what we're doing. So if we get this nice, if we get a nice pop up here, the US dollar is going to plummet. Now, if it doesn't plummet, that's going to be some extra, some interesting headlines as well. What are some things that you can think of headline wise that could happen if the dollar continues upward while gold continues upward? And it's happened before, and it was prior to the 1970s. I also saw that as well. But right now, we are considered to be in a deflationary inflation environment, okay? Which means that people are leaving certain securities and they're going into treasuries, because treasuries are actually paying more now. They're paying uh, one of the highest ones that I've seen so far, just from where I've dug around at, is almost 5%. So 4.70-ish percent. And that's where it's at. But anyways, the catch up is at 1324.65. Okay. And the blueberry is at 1817. Now the market's closed. I read that it said you were offline and markets aren't. Don't miss your move. Okay. Whew. I thought it wasn't recording. So 1817 isn't too far away from the current price, which is 1981. Okay. So of course it's going to fluctuate between there. And as you can see, this is a little tiny W. All right. Nothing special. It hasn't really uh, gone anywhere. But the thing is, it can literally prop itself up to continue a nice little line. Let's see how far this is. I can't even read that with that there. Okay. This is 784 points. All right. It took... It'd be nice if they didn't have this stupid thing here. 347 days for this little W to take place, to form out. All right. Now, whether or not our markets are, well, of course they are setting up the trap for the next cycle. As Ray Dalio says, the systems operate in cycles. There's the long-term cycles and there's the short-term cycles. So it has to do the traps. So gold may prosper, the dollar may prosper, whatever it may be. And the cycles have to play out. And if you don't know about the cycles, just type in Ray Dalio, how the economic machine works in your search handle, and you will find the video where he speaks on this stuff. So on this chart, on the monthly chart, we are not going to worry about the monthly. What we're worried about more is the 1324. You remember on the 12-month chart, the blueberry is at, okay, is this thing stuck? It is stuck. Alrighty, it's definitely stuck. So oh my gosh, there's so much. I don't even know if this is still recording or not. This is crazy. I hope it's still recording. I don't even know where this cut off at. The internet went off for no reason. Actually, we have a radio blackout that's going on over the United States right now from the electromagnetic storms that we have recently had, uh, which I believe started a few days ago. But yesterday we had a really bad storm. Today we had the blackout. So this is the first time I've lost internet today. I don't know where I left off. So as I was saying before, you have the 1817 blueberry here. This little W is going to stay. This W right here took about a year to play out. You have Ray Dalio, who talks about the cycles of the markets, whether or not the dollar goes up, gold goes up, whatever. The cycles have to play out, short term and long term. And if I remember correctly, Ray Dalio was talking about the US dollar is near its 100-year cycle or 75-year cycle. And we're in right now, as we speak, are in stage 5 of those economic cycles. If you don't know about Ray Dalio, just type in Ray Dalio, how the economic machine works, and you'll find the video there. All right. And so we have to see this go up in order for the US dollar to plummet. All right. And once the US dollar reaches its peak, gold will be at 1324. Okay. Now let's go back to the 12 month, and you have 1226. So it'll be between 1268 and 1324 as the US dollar rises. Now let's take a good look at this chart here. Okay. This right here took forever to play out. This mean little W right here, whew, that took a lot of work. 1,000. Oh, wow, that's longer than that. That's 10,167 days from 1980 to 2007. You see this right here? This is fascinating, okay? So from 1980, after Volcker got everything under control or was tying everything up, or whoever was in the Federal Reserve was tying things together, getting out of inflation. I don't remember the exact years where everything became under control from inflation. It was the either 79 or it went up to like 1984 or 83 or something like that. It's on another chart. Don't quote me on that, but this is where everything became squared away. So it did its W. Inflation became under control. So they say, quote unquote, right? Then 2007, as 2008 was coming in, when the real estate market started going crazy and brokerage firms were losing their handle on things, this is when gold popped up. Okay? So in the midst of a crisis, it did a beautiful upturn. Well, it's a beautiful upturn. So right now in today, 2023, they're talking about in the minutes of the Federal Reserve how we are in a slight recession. Okay? So if we're in a slight recession, that means gold maybe, depending on what the markets do, will